trade. So trading is higher risk, but with that high risk becomes high rewards.
Money mindset.
This is Millennial Money Mindset. If you want the fruits, you need the roots. Trading strategies. So we're talking about trading strategies today. So in other videos we've talked about the difference between trading and investing, and they're very different. So please check those out if you're confused. But we're going to give away trading strategies. So why do you need strategies? So trading is a different skill and it's a different niche than investing. So and we're going to give away, so stay right to the end because we're going to give away loads of value in this video. So why trade? So trading is higher risk, but with that higher risk becomes high reward. So if you're trading, it's much more likely that you can get better returns. But there's also downside. There can be, if you don't know how to trade or you don't have the correct strategies, then you can actually lose a lot of money. So we've talked about in the past where there's certain different types of trading. We use the example of contracts for difference. They call them CFDs, and they say 74% of the people lose money on these contracts for difference. So you have to be aware and know about what you're doing with trading, because you can easily lose a lot of money. So it's just a warning, this is trading, not investing. Do your own research, capital is at risk. This is guidance and not specific advice. So well, now we've got the warnings out of the way, let's give away the value. So trading strategies. So how to trade. So I worked for a trading company for 15 years. I used to trade natural gas. I traded natural gas for 7 years. So on a trading floor, 8 screens around me, working 12-hour days, looking at ups and downs of the trading market, the gas market. So the natural gas, when you turn your cooker on at home or your central heating, that's gas. So that price is it fluctuates a lot because it's very supply and demand driven. So let's talk about how to use these trading strategies to your advantage. So one of the key concepts is to have an edge. So have an edge over the competition. So what does it mean by having an edge? So if you're at home, you're trading at home, you're up against you're going to have a lot of competition, which is why lots of people lose, and why so many new people lose lots of money on trading. And there's so many different ways to trade, there's so many different strategies, and there's so many sharks out there that are just gonna get your money. They only just want you, they're essentially there to sell you training products, not actually to teach you how to make money. So they're getting rich from selling training courses to you, not actually teaching you how to invest or how to trade in this video. So yeah, be really careful about the advice that you're taking or the guidance, the education that you're getting. So you need to have an edge, so you need to be better than the competition. And so how do you do that? So you need to niche down. You need to essentially find a little niche that you're going to be better than the competition. So especially things like, people talk about Forex trading, so foreign exchange trading. So if you're just, which is like the currency market, so this is different between pound and dollar or yen and euro. And if you're just trading these two, you don't have an edge over the big banks or trading houses. So you're up against these big boys who, they've got better systems than you, they've got better processes than you, they've got faster internet connection than you. There's these internet connections that in nanoseconds can travel across the world. And if you're just using a slow broadband, you're going to get pummeled. You're going to get beaten every time. But you need to find an edge where you can go up against these big players. The way I think about this, it's a bit like there was a battle in Henry V's time. So I studied English literature, and the only William Shakespeare book that I remember was Henry V, or the one we studied was Henry V, and it's where England had battle against France in Agincourt, and essentially the English army was completely tired, was travelled around France, completely outnumbered, completely out kind of flanked. They were running low on food, water, supplies, and they were basically looked like there were no way they would be able to compete against the huge French army because they were at home, they were well supplied, they were rested, and they had kind of the cavalry were there. And essentially, but how Henry V won his battle was by thinking laterally. So he knew he could never beat the French against other. If they just went face to face, they were going to get pummeled because they had horses, they had better technology, they had better armour. So what did Henry V do? So essentially he drew the French army into a valley, into where it was like really boggy, it'd been raining for ages, and he knew that the French cavalry couldn't get through this thick mud, so the horses couldn't get through to this thick mud. And what had happened, basically the French army had loads of armour, and it was really heavy, and essentially they went and fought the English army, but they got stuck in the mud, and then the English army, Henry V in Agincourt, could basically go in, and they were really nimble, and they could essentially they won the battle. And they won the battle by thinking laterally. They thought, how could this small army beat this huge army? And essentially by thinking differently, they knew they had an edge over this other army because they were clever. They drew them into the mud. They knew they couldn't use the horses, and they couldn't use the armour because it was too heavy. And that's what you've got to do as a trader. You've got to think laterally, and you've got to think, how can you have an edge? So that's the story that I like to. Hopefully that makes sense. So how can you have an edge? So it's having a niche. So having a niche area. So what does having a niche mean? So it's having an understanding of a tiny little area or a segment of the market that you know more about that area than the market can appreciate. So this can be any market, this is why it's so great today. So you could be, if you're really interested in the environment, you could go and study about the environment and know more about the companies, the wind farm technology, or wind company, or solar panels. You're going to know more about those than the market can appreciate. So you're up against these institutional investors, and they've got lots of resources, and they've got lots of people working for them. You've got to find a niche so small that these big institutions don't have enough resources to research these small little companies. So this is why small companies can be a lot better to understand. So finding a theme. So go for something that you're interested in. I use the environment as an example, but you might be really interested in board games, or you might be really interested in computer games, and you know more about that than the market can appreciate. You might know more about, precious metals. You might know more about mining companies, or you might know more about oil companies, or you might know more about, you might have just had a baby and you've just been around cots, and you find out there's a new kind of up and coming product that the parents love and people are buying. There's a real buzz about this. So you can buy that company and make money from that. So this is theme investing. This is theme trading. It's buying one or two companies. And as coming back to the start, this is speculating, not investing. But it's having an edge over the competition. So it's looking for these trends. So follow the trends and follow them doing well. So this is essentially having an edge over competition. And this is different trading strategies. This is one of the trading strategies to find a niche that you know more about that area than the market appreciates. And I would say, if you're trading, don't invest or don't put more than 4% of your net worth into trading. This is super important. I'm going to repeat that. So don't put more than 4% of your net worth into trading. So if you have, say, £100,000, that's how much you've saved up. You only want to invest, or you only want to trade 4% of that amount. So you're only trading trading 4% on these ups and downs, these small little companies. And the rest of your money, the 96%, can be in safer assets. These can be in index trackers, these can be in funds which have lots of companies, these can be bonds or kind of property in much safer assets. So you're only trading on 4%, and that's super important. And then when you make money on that, then you can reinvest that 4%, and that can grow, and you grow your pot. And it might take time, it might take longer, but it will save you so much stress and so much worry about the ups and downs of the market. If you're putting a lot of your money, if you're putting 20% of your net worth into one tiny company, which is small, one of these small startup companies, or we talked about before, if you're putting it into a wind turbine company, that's super high risk, and you're going to not be able to sleep at night. And remember, investing is a long walk. The ultimate goal is to become financially independent and retire early. So you want to have a risk strategy. So it's all about knowing how much risk you want to put into the market. And if you're trading, 4% is how much you want to be. That's what you want to be putting in. So 4% of your net worth, and that's what having a trading strategy. So yeah, this is trading strategies and trading techniques. My name is Neil Doig. I am the founder of Money Tips, which stands for Tax, Investment, Property, Pension Savings. The author of Millennial Money Mindset, if you want the fruits, you need the roots, and the creator of Football Formation Asset Allocation, the card game that's going to teach you how to invest. So please like, please subscribe, and please tell one person about this video. Thanks so much.
Money mindset.